Hi guys, welcome back to our 2025 mentorship. As we had said in our past video, we said we shall continue with the structure breaks, those who are following, and the market structure shifts. So for the structure breaks, we shall be looking at the validity and confirmation, and then for the market structure shifts, we shall be venturing deeper into trend reversals. So for the structure breaks, a structure break happens when a swing high or a swing low is broken or taken out. A swing high is the highest weak point in price action for a given range or a working range. So if I say a highest weak point, I don't mean weak as in WEA. I mean weak as in what we looked at when we are looking at what a candle is. So if we have our dealing range, the highest weak point that forms our high or our low is a swing high or a swing low. So let's look at it. So is the highest weak point in our dealing range is what we refer to as a swing high. So if this point gets broken, or if market goes furthermore above it or below it, if we're in a downtrend, as you can see, a swing low, this is a swing high, this is a swing low. So for a swing low, we have 1, 2, and 3 points. So the middle candle that forms the lowest point of it, this is our swing low. So for me to look for a break of structure to the downside, I would want this level to be taken out. And for a swing high, it's just vice versa. I would want this level to get taken out. So what confirms the break of structure? A break of structure is only confirmed when we have a body closure below the swing high or the swing low. So in cases where we have market not giving us a body closure, what I mean by a body closure, I want market to drop lower and have that candle that took out that swing high or low to close with its body above or below the swing high or low respectively. So I have some examples. So this is a miniature model of how it should look like, or a line chart, if I'm to say. If this is my swing high right here at this point, and market comes back into our dealing range, I would want market to go higher and close above this reference point for me to mark it as a break of structure. So as if we transfer it into chart form, we can see that market dropped lower and went back into our dealing range. So as we said, in our dealing range, for us to know that market is going to form as a high here, we shall look at the premium and discount. So this market, if you look closely, this market went higher into premium, then it dropped lower. Now for me to consider this a break of structure, or to consider that this market structure, specific market structure, was broken, I would want this candle that took out this low to close below, and as you can see in this example, the candle closed lower, and this is a valid break of structure. But for an invalid break of structure, if I'm having my highest refresh point as this, you can see 1, 2, 3, and this makes this a swing high, market rallied higher and took out this level but did not close above it. So now this won't be considered as a break of structure. Now what does this break of structure help us? This break of structure helps us to know the intention of the market and to know where it wants to go to, because market breaks structure to the direction it wants to go to, and most of the times this break of structure is a continuation. This is a continuation in that given direction. We shall see when it happens and it is not a continuation how you can topple that given scenario. Now going into our second topic of this lecture, we shall look at the market structure shift. The market structure shift happens when market shifts from its given trend. We looked at trends. We had two trends, a bullish trend and a bearish trend. So if market is in a bullish trend and then changes from that bullish trend to go to a bearish trend, that is what we refer to as a market structure shift. So basically, if I'm looking at a market structure shift, if we are in an uptrend, and remember, in an uptrend, for us to make a break of structure, we need to take out a swing high. But what happens if market takes out a swing low instead? So if market takes out a swing low instead, that means market has given us a shift in market structure. That means the overall structure of the market has shifted from bullish to bearish. Now I will be looking for bearish breaks of structure. So I will be looking for the swing lows to get continued to be broken further. So as you can see in these models, I'm having a high, a low, and a higher high. Now I would expect market to drop lower back into this dealing range and then continue higher, breaking this to give me a break of structure. But what happens? Market drops and breaks this level, giving me a market structure shift. Now this is market changing from an uptrend to a downtrend. So it can happen both ways. Now if we are in a downtrend and market is dropping lower, giving me a low and a lower high, then market drops lower, giving me a lower low, I would expect market to retrace back into this level, into this dealing range, and then drop lower to give me a break of structure lower. So what happens if it breaks the swing high instead? That means market has shifted from its bearishness to its bullishness. So I think that is the criteria behind the market structure shift. Now these are some chart examples. So we are having market in an uptrend. As you can see, there is price action before this. We are having market in an uptrend. Market drops back down into our dealing range, continues higher, giving us a break of structure with a body closure. So I would expect this market to come back into this dealing range and continue higher to give me another break of structure higher. But what market does instead, goes lower and breaks the swing low instead. So this is the market structure shift for a bearish example, and for a bearish example, a bearish shift. Now for a bullish shift in market structure, we have market rallying lower, making lower lows. Now we have a lower low right here. I expect this market to retrace back inside this range and drop lower to give me a break of structure, but market breaks structure to the upside, that giving me a market structure shift. But take note, a market structure shift does not need a body closure. A market structure shift does not need a body closure, so take note of that. And so if I'm to talk more about trend reversals, I think we shall more so cope up with that when we are looking at advanced market structure, and I think that would be our next lesson. So subscribe, like, and I think we shall continue from there. I'm trying to make my videos shorter because that is one of the main inconveniences we faced with ICT's videos. You find he has videos for 4 hours, but I would advise those who are watching his videos not to complain about the time, because he says a lot of important stuff what you guys take as yapping, but he says a lot of sensitive content. So if you're looking at it as an investment in your trading journey, for you to gain more knowledge about the markets, I think you should watch his lectures fully without skipping anything, because he says a lot of useful things. Until then, thank you for listening.